Hello and welcome to another interesting episode of Islamic Finance Weekly. Last week, we discussed about regulations and the growth of the non-interest financial market in Nigeria. Today, we'll be having a conversation on legal dimensions to the Islamic finance market. I would like to introduce to you my guest, a lawyer and lead advisor at DLHQ Partners, Mrs. Tosin Ajose. Welcome to the show. It's a pleasure to have you.
Thank you, Bukola.
Firstly, in the area of legal documentation, how can this be standardized for the body non-interest finance market to pitch it like the conventional market?
Principally in the syndicated loan market, standardization of documentation is one of the core principles that applies. And if you look at the way the syndicated loan market works across the world, it's very, very essential that documentation is standardized. And why is this very important? I think first off, it's a very complex segment of the financial markets because it has diversity of parties. It sometimes has to do with syndication in multiple currencies, and sometimes you also have to do with parties across several jurisdictions. So standardization of documentation helps the parties, one, to have certainty as to the terms that would apply to the transactions, irrespective of the jurisdiction where they are participating from. That's one. It also allows for achieving an efficient market. So when you're working on a transaction with multiple parties across multiple jurisdictions, you don't spend a lot of time negotiating the terms because they are standard, permissible principles that are accepted in the market. However, where you do not have standard documentation, what that means is that a transaction that should not take you more than a couple weeks to close, you would then end up having to negotiate every fine line principle in that agreement before you can get a concurrence amongst the parties. Globally, I know that there has been some efforts amongst, association of non-interest banking practitioners to try to, get to a point where we can have standardization of documents within their own jurisdiction. I know that I think there is already, some standard documentation for Wakala issues. We're hopeful that, there will be more, efforts, to entrench this within the market, because that is when you will begin to see a lot of activity in that market. I think on the Nigerian leg, there is already a Nigerian Association of Non-Interest Banking Practitioners, and I know that there has been some effort at trying to aggregate, interest amongst lawyers and law firms in Nigeria and getting them to work, towards beginning to create standardized documents that have, local flavor, that would take into cognizance the realities of our Nigerian markets. And as you very well know, there is already sufficient interest and activity in the non-interest banking segments in the Nigerian market.
Thank you very much for that. Globally, Islamic finance still faces the issues of standardization. So what do you think we can do to overcome these challenges?
When I look at the market, in comparison to the conventional finance market, I think two things is what I see as being responsible for the slow pace of achieving standardization. And one of them will be that there are diverse schools of thought as to principles of Sharia. Even amongst Islamic scholars, there's hardly a time where you will find a concurrence on any particular issue. There are still times where, different people, depending on the country and sometimes their religious sects, you will find that, they may not necessarily always agree on the principle. But I think working towards aggregating, commercial principles and the Sharia principles in a way that is efficient for the market is what we need to be driving at. So everyone that is a stakeholder in the market should be trying to align in terms of principles that would drive the market forward, and that would help to, achieve, some kind of standardization.
Thank you very much for that. That was insightful. So as a lawyer and lead advisor, how can the issues of multi-currency and multi-jurisdictional syndication be addressed in the Islamic finance, especially as it has to do with sukuk issuance?
I don't think that you can have a loan market without having to deal with the issue of multi-currency and sometimes multi-jurisdiction. And particularly when you're talking syndicated loan financing, one of the core features of syndication is the fact that you have access to global capital. And that means that I can see it as one who needs capital in the Nigerian market and look for an arranger that can actually put together a club of lenders across different jurisdictions to meet my needs. So in the syndication market also, it's one of the places where you are able to transact across different currencies. So take, for instance, you could have a company in Indonesia that is trying to do business in Qatar and is trying to raise capital and needs this to be done in 2 tranches in 2 currencies. So you may need to raise some capital in US dollars and also raise perhaps some capital in another currency. The syndicated loan market recognizes that, in the course of transaction, there would sometimes be needs to aggregate effort to raise, capital across jurisdictions and in different currencies. So it's more a plus than a minus. However, there are certain risks that are associated with syndicated financing, particularly when it is multi-jurisdictional. You have to think of issues around conflict of laws, because you typically would then have parties that will straddle across different jurisdictions. So in the event that there is a dispute that arises in the course of the transaction, what would you deem to be the choice of law that would apply? And the choice of law can vary depending on the subject matter of the dispute.
Exactly.
However, it's not uncommon in this market, in the syndicated loans market, for parties to pre-agree the choice of law that would govern the disputes that arise, in the course of the transaction. However, there could still be complexities even when the parties have chosen the law that they want to apply. You then need to talk about how enforcement will happen. So if we decide that the law that would govern our transaction is the law in this particular country, then what happens when we're trying to enforce? And as it relates to non-interest syndication, typically you would expect that the laws that would govern will be the principles of Sharia. However, that we mentioned before that these principles sometimes vary depending on the scholar you're talking to, what sect they belong to, and what country. Some countries are a bit more accepting of Western principles. Some are a bit more conservative in their approach to laws and interpretation. And then, of course, there's also the issue of enforcement, because at the end of the day, irrespective of the law or the principles that govern the contract, you need to enforce the decision on any dispute through a recognized conventional court of law. There have been situations where, disputes are determined in line with the Sharia principles, and you can see the coloration of conventional principles of law in the implementation of, the awards when it gets to, the court. So I believe that, one is to continue to try to have, a single focus when we're talking about, principles of Sharia, and have, scholars agree across country as to certain principles, and those can now become globally established, principles that would apply when you're talking about Sharia syndication, and that makes it easier, to enforce, these decisions through the conventional courts. The other thing is, it then makes it easier for parties to even determine, what principles are acceptable as it relates to, issues that could arise, out of their transaction. The financial markets does not like uncertainty, and the cost of uncertainty cannot even be quantified. So a lot of times you would rather deal in an area where you're certain, what laws on what principles would guide your transactions, because everything has a cost element to it. So I think that that's
Thank you very much. Also, from your response, you mean law enforcement, ethics, and Sharia compliance key to the non-interest finance market globally. Thank you very much. So from your perspective, what are the legal provisions to unlock potentials for the non-interest finance market in Nigeria?
I think that Nigeria is A very interesting market, and particularly as it relates to non-interest financing. I think that we have demonstrated that there is definitely interest among stakeholders in the financial markets. I mean, we are all aware that the federal government of Nigeria has issued 2 series of sukuk bonds that have done very well in the market. In fact, the issuances have been oversubscribed at the 2 instances. And I mean, that bold step by the government has already demonstrated that, you know, it's a welcome, you know, idea. And see what is happening in the insurance and the banking sector. We already have about 4 or thereabout Takaful insurance companies in Nigeria. And of course, we would also mention the commercial banks that practice the principles of non-interest banking, and they are doing well in the market. So definitely in relation to interest, there is interest. Now, what can we do in terms of laws and regulation? I think that the Central Bank of Nigeria needs to deepen the laws and regulations that relate to non-interest banking. So already we have rules that are clear around some products, specifically sukuk bonds issuance. However, there are several other, you know, instruments that, you know, can, you know, be accessed in the market that we still need, you know, some measure of, you know, laws and regulation to make popular, particularly syndication. I think that, you know, it'll be good to have, you know, clear principles as to how this would apply in the market. We need to know what prudential rules would apply to these loans if they are issued. We also need to know how, you know, they will be treated on the balance sheet of, you know, some of these financial institutions. I think that beyond that also, there is need to create sufficient awareness and knowledge in the market. The financial market, apart from not being friendly to uncertainty, is also not friendly to things that are not, you know, clear or there isn't sufficient knowledge about. So even though the principles of non-interest banking, on the face of it, are acceptable to a lot of people, but the fact that they don't even understand, you know, what this market entails, how these instruments work and all of that, it doesn't allow us, you know, to achieve, you know, the benefits of a deepened market. So I think that, you know, the central bank, even the Securities and Exchange Commission need to, beyond, you know, the good work that has been done in the sukuk bond market, also begin to look at other instruments that can be used, you know, to, you know, create some financing that's, you know, are acceptable, you know, under the principles of Sharia. I think so.
Creating awareness is key to the non-interest market in Nigeria.
Absolutely. I believe that awareness is key.
Thank you very much for that. Would you like to see more from the regulators like CBN and NICOM for the regulatory framework to boost non-interest banking and Takaful insurance?
I'll start from Takaful insurance because I think that already there's some measure of, you know, good work that has been done in relation to non-interest banking. So the first point is how well is the insurance sector in Nigeria doing? I think that a lot of work still needs to be done by NICOM as regulator of that industry to ensure that there is sufficient knowledge as to how insurance works and the benefits of insurance, and also to ensure that they entrench, you know, trust in the market. A lot of people have the notion or the mindset that when they buy insurance products, they are simply contributing to the bottom line of insurance companies, because we have a people in Nigeria that believe that it's God that protects. I mean, and that no matter how well you, and I think some people even believe that you don't prepare for risk, that when you prepare for risk, you are actually making conscious effort to attract, you know, the risk. So for me, I think Takaful is that link between the cultural consciousness of our people and insurance products. And why do I say this? Because the principle of Takaful is that there is a collective, you know, effort to share risk between the user of the product and the insurance company. So, like I said, a lot of people look at, insurance product as just a mere contribution to the insurance company. But if we then have a product that comes to market and says your contribution to this product is not totally for the benefit of the insurer. If no risk crystallizes during the period of your cover, then it will be deemed that the contribution is an investment in the hand of the insurance company, and that at the end of the cover period, you would actually have a right to participate in the upside of any revenue that is generated from that contribution. I mean, that's a win-win right there. That's a win-win right there. And for me, a lot of people, if they understood that this is the principle of takaful, I think would be more than willing to embrace, this as an insurance product. So, I mean, I think a lot more needs to be done in terms of, social awareness, and also just in terms of creating trust in the insurance sector itself, and then for people to understand the intrinsic benefit of having cover. Nobody prays for risk, but I mean, in the world that we live in, it's something that you cannot avoid. Once in a while, things will not go exactly as planned. So we expect that, there will be a lot more work done. I like the fact that, there's recapitalization, going on in the sector, which is allowing to strengthen these institutions to have, deeper, financial base to actually serve the industry. But beyond that, I think that we want to see a lot more effort, at educating people. And I think that we also want to see a lot more work being done in establishing the principles of reinsurance, particularly as it relates to takaful.
As an evolving market, do you agree that there is enough expertise in the legal side to deepen non-interest finance space?
I think that I probably had to answer this question a couple of times. And one of the things that I basically say to people is that you don't need to be a Sharia scholar to practice in the non-interest banking space. Okay? I think that the principles of commercial law apply in transactions in this space. However, you need to be able to blend the principles of Sharia law in your application of the regular, conventional commercial law practice. So I would say that a lot of people, maybe there isn't sufficient interest, but I wouldn't say that there isn't sufficient knowledge, because any lawyer that understands commercial law practice is able sufficiently, with a little brushing up on the knowledge of Islamic finance, to practice in this space. And of course, we already have a community of practitioners, we have a community of scholars that are already, supporting the industry with the knowledge, that would help us deepen the market. So I think amongst lawyers, what I would probably like to see is a lot more people trying to even understand, how the non-interest banking, side of finance works, and that there's a lot more collaboration amongst, practitioners to support what is happening in that space. Now, as to how we can, deepen, knowledge, I think that, there should be a lot of awareness, particularly from commercial transaction courses that are taught in the law school and in the universities where people are studying, to get their degree in law. There should be a consciousness that there is, another, segment in the finance market that is called, non-interest finance, and that, it's becoming more entrenched in the conventional financial market. And, from that point, people then begin to, understand that it's a part of the global financial market.
Curriculum for non-interest finance market.
Absolutely, and even if it's not a course on its own, it should be entrenched into commercial transactions, because I believe that this segment of the market has come to stay. And I mean, look at what is happening across the world. You have conventional banks now, delving into, non-interest, finance, and you see that, the products are becoming mainstream and becoming even more acceptable amongst, all the users of capital in the market. So anyone who's not looking at what is happening in that space is actually ignoring, a market that is blossoming and it's going to become a thing in the future.
Thank you very much. So what do you think can be done to build capacity?
So, I mean, I've talked about, including it in the curriculum for schools. I think that also within the judicial system, there has to be a lot more, awareness, because even across the world, you find that, our conventional way of thinking sometimes finds its way into the enforcement of, of laws and contracts, that are non-interest finance based. So we need to ensure that even within the judicial system, the judges and lawyers are being, brought to speed as to the principles of Islamic finance. And I mean, there are just some basic principles around that. People should understand the principles of haram and things like that, which are the fundamentals on which Islamic finance market is based. Once you understand the fundamental principles, then you are able to understand the products. Once you understand the products, then you are able to follow the laws and regulations. I also think that amongst the regulators, there needs to be a lot more consciousness. You cannot regulate what you don't understand. So I know that bringing it back home, there's already a lot of awareness amongst our regulators, at least in comparison to some other jurisdictions. And I would hope that there will be deliberate efforts at making sure that knowledge is carried across the value chain, and that people actually understand how how it works.
From your perspective, what do you think the future entails in the Islamic finance market in Nigeria?
Okay, I think that there's going to be, a lot of growth in the mid to long term, for this non-interest finance market. And I'm very excited by what I see. I see that in spite of the dearth of knowledge, there is actually, more than sufficient interest. And thinking about where we are now in the Nigerian financial market, where the free risk rate of return has been sliced to almost non-existence, I think that this is the time where you would have people seeking alternative outlets for their investments. And there's no better time to be trying to deepen the non-interest finance market than now, and to bring creative products to the market, particularly the ones that would have, significant impact on the lives of people. So, and I mean, that's one of the fundamental principles of Sharia, actually, that everyone that is involved in a process should benefit across, the value chain. I think those principles they're good to have. I think that, they're easy to sell as well. So I think that, I expect, a lot of creativity in that space right now, bringing very, very competitive products to the market. And we would expect a market that would develop really, really fast in the next couple of years.
Thank you very much for your contribution. It was an interesting discussion with you.
Thank you for taking the time to speak with me, Bukola.
You're welcome, ma'am. And that will be all for this edition on this program. You can send questions and comments to news@proshnd.com and reporter@proshnd.com. Also, you can engage us on our social media handles displaying on the screen. Many thanks for watching, and bye for now.